Most viewers hear Q2 2026 tokenization headlines and any credible BlackRock-adjacent settlement integration signal and assume the story is obvious. It isn't. The headline sounds bullish or bearish on the surface, but the real move usually starts when the market reprices the hidden mechanism underneath it. This setup matters because what 750 XRP could be worth after one urgent BlackRock tokenization signal is not just a headline story. It can change the math for 750 XRP faster than most holders expect. Stay with me, because the key signal is not the loudest one. It is the one that changes what happens next. By the end of this video, you'll know exactly which signal matters most and what it means for your next move. And I'll translate that into real XRP holder math with concrete upside, downside, and positioning scenarios. Now zoom out. Why is this even on the table? Because tokenization is no longer a fringe concept. Institutions want collateral that can move faster, treasury systems that are less clunky, and markets that do not go blind every time traditional settlement windows close. That is why every rumor cycle around BlackRock, fund tokenization, and institutional settlement gets attention. But attention is not the same thing as relevance. XRP does not automatically win because tokenized funds exist. XRP only wins if the growth of tokenized assets creates demand for the exact function. Ripple has spent years pitching, moving value across systems, across jurisdictions, and across liquidity environments without turning every transfer into a slow manual process. Pause there. That distinction changes everything. Here is the first filter. 3 kinds of headlines do almost nothing for me. A tokenized asset launch on its own does not matter much. A pilot announcement with no settlement detail does not matter much. A BlackRock-adjacent rumor with no operational language definitely does not matter much. Why? Because the market has learned to overreact to branding and underreact to plumbing. The assets that benefit most are not always the assets that get named first. The winners are often the rails, the liquidity layers, and the settlement routes that people only notice after the headline gets digested. So when you hear the words BlackRock and tokenization, do not ask, is this big? Ask, where does settlement happen? How does liquidity move? And is cross-system interoperability now part of the story? That is the real game. And this is why April matters more than a random calendar page. Markets do not wait for perfect certainty. They position into windows where policy, custody, filings, and institutional narratives can converge. If there is procedural movement around market structure in mid-April, if trust bank or custody pathways keep maturing, and if institutions are trying to front-run the next quarter's narrative rotation, then a credible settlement clue can hit harder than the average crypto headline. Not because law changes overnight, not because BlackRock suddenly becomes an XRP billboard, because capital tends to price optionality before it prices consensus. That is the part retail usually sees late. Hold that thought, because this is where the bag math starts to matter. Let us start with the WEEX scenario, the one most people confuse with the real thing. Say a BlackRock-related tokenization headline circulates, retail grabs onto it, and XRP gets a sympathy repricing even though there is no direct proof that XRP sits in the settlement path. That kind of move can still be meaningful. If XRP rotates into a modest narrative band at $3, 750 XRP is worth $2,250. At $4, it becomes $3,000. That is not the kind of move that changes your life on the spot, but it is absolutely the kind of move that changes how smaller holders think about their positioning. Suddenly, 750 XRP does not feel tiny. It feels like a bag with sensitivity. Quick reality check. That is the low-end path. And even that path matters if the market mood flips from indifference to institutional curiosity. Now, the second scenario is where things get interesting. This is the one where a real settlement clue appears. Not a meme, not a fake screenshot, not a vague association. I mean actual language around interoperability, treasury movement, collateral transfer, settlement finality, or a workflow that implies value may need to move between environments rather than remain trapped inside one closed ledger. If that kind of signal lands with any BlackRock adjacency, the market does not just hear tokenization, it hears infrastructure. And once XRP gets reintroduced to the market as an infrastructure option, instead of just a speculative courtroom survivor, the valuation conversation changes fast. At $6, 750 XRP is $4,500. At $8, it is $6,000. At $10, it is $7,500. That is where holders stop counting coins and start counting exposure. If this breakdown is helping you separate noise from signal, hit like here because this is exactly where most XRP videos lose discipline. They either dismiss everything as hopium or they skip straight to absurd moon numbers without showing the chain of logic in between. The chain matters. Institutions do not need to buy the asset emotionally. They need a reason to treat it as useful, optional, or strategically underpriced. Once that framework enters the market, price can move harder than people expect because the re-rate is not purely speculative anymore. It becomes a mixture of speculation, positioning, and infrastructure probability. That is a much stronger cocktail than social media excitement. Now let us talk about the third scenario, the one that creates the biggest disagreement. A true liquidity premium move would need more than a single flashy headline. It would need one serious BlackRock-adjacent settlement clue, plus at least one reinforcing condition. That second condition could be a clearer custody or trust bank pathway. It could be a second institutional proof point. It could be a regulatory shift that makes enterprise deployment look easier, not harder. Or it could be a broader market realization that tokenized assets still need reliable value transfer outside their own silo. If that stack of evidence forms, XRP does not just get a narrative bounce, it gets repriced as a possible piece of the plumbing. That is when $12, $15, or even $20 math enters the conversation without sounding insane. Not guaranteed, not immediate, but suddenly explainable. Run that math slowly, because this is where a lot of holders either freeze or get sloppy. At $12, 750 XRP is $9,000. At $15, it is $11,250. At $20, it is $15,000. That does not mean you wake up rich. It means a medium-sized retail bag starts behaving like a serious asymmetric position once the market upgrades the asset from story stock energy to infrastructure optionality. And if you think those numbers sound extreme, remember what markets do when they move an asset from one category into another. The revaluation is rarely linear. First people ignore it, then they mock it, then they build models around it, and then they chase it 1 quarter later at much worse prices. But wait, there is a real counter case, and you need to respect it. Tokenization can grow aggressively without XRP capturing much of that value. If large institutions keep settlement fully internal, if stablecoins absorb most of the movement layer, if private rails dominate the actual transaction path, or if the relevant interoperability ends up happening somewhere else, then XRP may still rally, but it underperforms the dream. That is why I am not telling you to worship every BlackRock headline. I am telling you to grade the headline correctly. Weak signal, small repricing, credible settlement clue, bigger repricing, reinforced operational pathway, major repricing, no real settlement relevance, limited follow-through. That framework saves you from both blind euphoria and lazy cynicism. Here is where this gets personal. If you hold 100 XRP, you are not holding a magic ticket, but you are holding enough to notice what category change can do. At $5, that is $500. At $10, that is $1,000. If you hold 750 XRP, you are in the exact range where one legitimate institutional clue can make your stack suddenly feel real. At $8, that bag is $6,000. At $15, it is $11,250. If you hold 2,500 XRP, the same move becomes $20,000 at $8 and $37,500 at $15. If you hold 5,000 XRP, now you are talking about $40,000 at $8 and $75,000 at $15. Comment with your bag range, or just drop 100, 750, 2,500, or 5,000. I want to know where this audience actually sits, because the right strategy is different for each level. Now let me close the open loop from the beginning. The sentence you should care about is not BlackRock tokenized another product. That is interesting, but incomplete. The sentence that matters is something closer to this: settlement, collateral transfer, interoperability, treasury movement, or liquidity routing now requires a bridge between systems. That is the boring line. That is the line almost nobody clips. And that is the line that can change the valuation framework for XRP, because it transforms the conversation from publicity into function. Once function enters the room, the market starts asking a different question. It stops asking whether XRP deserves attention and starts asking whether XRP is underpriced relative to the role it could play if this architecture keeps expanding. So what should you actually watch over the next stretch of April and into Q2? Watch for operational wording, not logo worship. Watch for any settlement language that sounds repeatable, not experimental. Watch for trust, custody, compliance, or enterprise workflow clues that reduce friction instead of adding ceremony. Watch whether a second proof point appears after the first headline, because one signal gets attention and two signals create a narrative trend. And above all, watch whether the market begins treating XRP as a throughput asset again. That is the switch. That is the re-rate. That is the difference between 750 XRP feeling small and 750 XRP becoming a position you suddenly take much more seriously. My base view is simple. 1 week BlackRock-adjacent headline can move XRP, but not enough to change the structure. One credible settlement clue can move XRP enough to change how the market frames the asset. One credible clue plus a reinforcing institutional condition can create the kind of non-linear repricing that makes even a 750 XRP bag feel important. If you want the follow-up on the April 15th policy window, the May positioning setup, and the next headline criteria I am using to judge whether this becomes real, subscribe now. The people who win these narratives earliest are usually not the loudest. They are the ones who know the difference between branding and plumbing before the rest of the market catches up.